Ladies and gentlemen, good day and welcome to the Mahanagar Gas Limited Q4 FY23 conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. S. Ramesh from Nirmal Bang Equities. Thank you, and over to you, sir.
Good evening and thank you very much. On behalf of Nirmal Bang Institutional Equities, I have great pleasure in inviting you all to the 4Q FY23 earnings call with the management of Mahanagar Gas Limited. The company is represented by Mr. Ashu Singhal, Managing Director, Rajesh Patel, the Chief Financial Officer, and Mr. Rajesh Wagle, Senior Vice President Marketing. So may I hand over the call to Runjun from ENY to give the disclaimer statement, following which we'll have opening remarks with the management and Q&A. Runjun, over to you.
Thank you, Ramesh. Welcome to the participants in this call. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature, and we believe that the expectations contained in the statements are reasonable. However, these statements involve a number of risks and uncertainties that lead to different results. The risks and the uncertainties related to these statements are included, but not limited to fluctuations of sales volume, fluctuation in foreign exchange, or the cost and ability to manage growth. I urge you to consider the quarterly numbers not a reflection of long-term trends or indications of full-year results. They should not be attempted to be extrapolated or interpolated into a full-year number. With that said, I will now hand over the call to management. Thank you, and over to you, sir.
Thank you so much. A very good afternoon to all connected with the call. And on behalf of MGL management, I welcome all to the earnings call of this fourth quarter results of financial year 22-23. I would like to thank all of you for attending our call today. Just to give you a brief of the financial performance and the numbers of the company, and before that, just to set some numbers on the to set the tone, domestic gas prices and gas allocations have remained a challenge during this financial year. However, with the notification of government on HPHT, that is high pressure, high temperature areas, given the priority to allocation to CGD and new domestic gas pricing policy from April 23, this has given a good relief to the CGD sector. In February 23, gas from HPHT fields is available to CGDs for CNG and domestic PNG on priority allocation as per MOPNG notification dated 13 January. This helps CGD entities in replacing earlier costlier LNG, RLNG, for CNG and PNG with HPHT gas. Further, the government also has changed the APM pricing formula and accepting key recommendations of Kirit Parikh committee with effect from 8th of April 2023. APM gas will now be priced at 10% slope to Indian crude basket on monthly basis with a floor of $4 per MMBTU and a ceiling of $6.5 per MMBTU for the first 2 years, and annual escalation of 25 cents per MMBTU thereafter 2 years. New guidelines remained silent regarding deregulation of APM prices and removal of ceiling price for HPHT produced gas prices. Post availability of HPHT gas on priority, MGL reduced its CNG prices with effect from 1st of February 2023 by rupees 2.5 per kg. That is from 89 rupees 50 per kg to 87 rupees per kg. Further, post-implementation of new pricing formula, CNG prices were again reduced effective 8th April 2023 by rupees 8 per kg. That is from 87 rupees per kg to 79 rupees per kg. Similarly, domestic PNG prices were also reduced by rupees 5 per SCM with the same effective date of 8th April from rupees 54 to rupees 49 per SCM. MGL continues to create CGD infrastructure across its business segments in the licensed area, and during the quarter, 92,274 domestic households were connected and thus we have established connectivity for nearly 2.17 million households, that is 22 lakh households. We have also laid 128 kilometers of steel and PE pipelines, thereby taking the aggregate length to 6,535 kilometers. We have also added 12 new CNG stations. With these, we have now 313 CNG stations as of 31st March 2023. We also added 115 industrial and commercial customers during this quarter, and thus on the financial year end, we have 4,558 INC customers. In related to our Raigad GA, 33 domestic households and 28 CNG stations are currently operational. During the quarter, we laid around 10 kilometers of pipeline in Raigad, thereby taking the total length of pipeline to 382 kilometers. This expansion network has created a good ecosystem for CNG and PNG in this area. The first 3GS and first mother station was also commissioned in GA3. Coming to MGL's operations now, average sales volume for the year ending 31st March 23 is 3.423 MMSCMD against 2.999 MMSCMD in the corresponding period last year. Therefore, there is an increase of 14.11% in the overall sales volume compared to the previous year. Average sales volume for the year ended the current financial year ended 3.423, which consists of 2.492 MMSCMD for CNG, 0.487 MMSCMD for domestic PNG, and 0.444 for INC segment. Compared to the last year, sales volume in case of CNG has increased from 2.114 to 2.492. That is an increase of 17.86%. In case of INC sales, volume has increased from 0.419 to 0.444. That is an increase of 5.95%. Domestic PNG sales has also increased from 0.466 to 0.487 MMSCMD. That is an increase of 4.45%. Coming to this quarter-on-quarter comparison, average sales volume of Q4 FY23 is 3.372 as compared to previous quarter of 3.412 MMSCMD. Such average sales volume of 3.372 consists of CNG volume of 2.41, domestic PNG volume of 0.51, and INC volume of 0.452 MMSCMD. Compared to the previous quarter, overall volume has reduced due to 2.6% reduction in CNG volume. This is primarily due to high CNG prices of 89.5 rupees, which have been now reduced to 87 and further reduced to 79 with effect from 8th of April. Thus, we expect that with reduction in these CNG prices, new growth volume should pick up. EBITDA for the financial year 22-23 is rupees 1184 crore compared to previous financial year EBITDA of 924 crore. That is an increase of 28%. Net PAT, profit after tax, is rupees 790 crore compared to PAT of 597 crore in previous financial year. That is an increase of 32%. Q4 EBITDA has substantially improved to 390 crore as compared to 256 crore in the previous quarter. Mainly this is a result due to reduction in weighted average cost of gas during this quarter. Net PAT for the quarter has increased to 269 crore from previous quarter of 172 crore, an increase of 56%. I'm happy to announce that Board of Directors has also approved a final dividend of 16 per share, per equity share for financial year 22-23. Thus, total dividend for the year, including interim dividend already paid, is rupees 26 per share. That is 260% on the face value of rupees 10 per equity share. With this, I conclude and would now like to open the floor for the question, and thank you very much for your patient listening.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you very much for the opportunity, sir. Two questions. One, you spoke about the HPHT gas replacing costlier LNG. If we can kindly get some details in terms of the overall volumes that we have, what is the extent of HPHT gas that we have in our portfolio, and how much was the LNG consumption for this quarter and for this year?
Yeah. Good evening, Prabal.
Hi, sir.
I think very appropriate questions from your side. Total HPHT for Q4 we have used is around 0.19. Okay.
Okay.
And balance was APM as far as CNG and domestic PNG is concerned.
Okay.
CNG and domestic put together was roughly, the volumes were slightly down in case of CNG, around 2.93 MMSCMD. Okay. And both CNG and domestic requirement was fully catered through APM and HPHT.
Right.
This quarter.
Right.
Okay. You also asked what was the spot or RLNG.
Yeah.
During the quarter, roughly we have bought around 0.14 of MMSCMD of spot, and rest was through term contracts which we have in place for INC. This is the primary breakdown.
Got it. Great. The second question was with respect to volume growth. Now you have earlier highlighted a certain CAGR that you sort of aim to achieve in terms of 5 to 6%. My question was, with the kind of steep reduction in CNG prices that has been afforded due to passing on of the domestic gas cost, do we see a stronger demand momentum at least in the near term, sir, for FY24? Or are we still happy with sort of maintaining that broad guidance of 5 to 6% growth annualized?
I think we have been always indicating or giving the guidance of roughly 5 to 6%, right?
Mm-hmm.
If you look at my volume growth since FY 2018-19 till 2022-23, despite COVID and despite volatility in gas prices and high gas prices, we are still clicking a CAGR of around 4.85, very near to 5%, right?
Right, right.
And with now, with Kirit Parikh committee recommendation and prices coming down, we see that CNG will pick up. There is also with Raigad area getting connected, we have lined up INC customer, so those volumes will also be added. And I think in case of domestic PNG, we have a very normal growth rate where we are generally clicking on an average 5 to 6% every year. However, since last 2 years, number of domestic connections we have substantially increased. Okay, we are almost reaching to 3 lakh houses. As and when they start consuming gas, out of 3 lakh, at least 1.5 lakh starts burning in the same year, and rest get added in the subsequent years as and when flat gets occupied. Okay.
Right.
We hope that CNG as well as domestic and INC, all three put together, we should be in a position to give a volume growth on a long-term basis around 5 to 6%. However, we can always look at our pricing and see the elasticity of demand with respect to CNG specifically to see how do we trade off between volume and the price and achieve the targeted volumes as well as profitability.
Just to add there, I mean, this is a kind of business as usual scenario. If there is any upside on account of any environment-related initiatives, either from the government or from the courts, this number can only go up.
Of course. Sir, if you see that the numbers have been impacted because of COVID during the last few years, and also because of high LNG prices, the prices of CNG were increased in quite a very short interval from 56 rupees to 89 rupees. So as you rightly mentioned, now it has come down. So we expect that the numbers should pick up and maybe 5 to 6% can be slightly better than that also.
Just to add, this little impact, but during Q4 specifically, there was some buses of BEST due to some accident, not as a result of CNG, who were under testing almost for a month or so, and around 300 plus buses remained off the road. That has also contributed little reduction in our CNG volumes, okay, which was one time. Now all those buses are back on the road, and we are seeing normal consumption by BST as well in the month of April and maybe 2nd of March.
Got it, sir. Thank you so much for such a detailed answer. It was very useful. I'll come back if you have more questions. Have a nice day, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Abhilasha Satale from Quantum AMC. Please go ahead.
Yeah, thank you for taking my question. My question is again related to volumes only. So during the quarter, we have seen some reduction in volume. So how have the conversions moved during the quarter? And with the reduction in pricing, are we seeing any pickup in the conversions? And of course, if you could give number of MHCV conversions on the
number of
MHCV, like CVs, if you can give number of how many.
If you see quarter 2, quarter 3, we were generally having vehicle on CNG roughly in the range of 15,500 to 17,000. Q4 there was a little reduction, and the number is roughly 14,000 approximately. Within that, commercial vehicle, you wanted to know how much is the commercial vehicle addition?
Yes, that will be.
Commercial vehicle is roughly 1,300 plus. Small commercial vehicles, tempos and trucks put together, roughly 1,350.
Okay. See, I missed the number for Q4. Did you mention that? Because Q2, Q3 you said 15,000 and 17,000, and Q4 what was that number?
14,000 roughly. 14,000 vehicles. 13,700.
Okay. And with the reduction in the prices, what we have seen in Q1, are we seeing the momentum picking up as far as conversions are concerned?
Once we dropped the price on 8th of April, we witnessed a week-on-week increase of about 7% in the volumes.
Okay. And as you go forward, whatever the reduction has come to APM pricing, this is the maximum, we are comfortable with the CNG price reduction, or is there any further room that, as we optimize costs further, there is a price reduction expected in future also?
Depends on many factors. One is that how the petrol and diesel prices are faring. Second is what is our total cost of procurement. Whatever the reduction due to Kirit Parikh has happened, we have passed on to the customers. But we will again review the situation on month basis, and if there is something more which can be passed on to gain the volumes, we will be certainly looking at it.
Okay. And just the last one, as our cost structure is also shifted downwards, and we have passed on most of the benefit to the consumers. So, what is our target, or what do we see our EBITDA per SCM to be in the range of that 8.59 rupees we should be able to maintain?
EBITDA per SCM is a function of a lot of factors. Okay. So apart from CNG and domestic and the available gas prices, APM as well as HPHT or any other gas we use for priority, we have industrial and commercial segment where our pricing is linked to alternate fuels. So if alternate fuels link realization is good, we may be in a position to make good margins. And also those term contracts are linked to different index. So depending on the index movement, the cost of gas will get determined. So all these factors will determine what should be the overall EBITDA per SCM for the company. However, with respect to major part of our volume, that is CNG and domestic, we see a comfortable position at least for the next few months and a quarter or so, because as you may be aware, with 6.5 cap on priority gas, spot prices also are reasonably down in the range of $10 to $12. HPHT is available in the range of around $12 plus. Okay, so we expect that at least next few months we should be in a position to maintain our margin. Also, since now, as earlier MD said, CGD has a priority allocation for HPHT. We have participated in the last round of HPHT gas auction by Reliance, and we have tied up something. Further, there is HPHT round coming up in this month, and also maybe after 4 or 5 months. So we will be evaluating spot what is beneficial for near term, and then tying up for long term gas under HPHT also. So by and large, we feel that at least next few months and quarters, we should be in a position to have a good control over gas costs.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Rajesh Enor from ITI Limited. Please go ahead.
Hello. Thanks for the opportunity. Am I audible?
Yes.
Okay. Sir, my question is on our total volume consumption on the CNG side. Can you give us some idea about how much is consumed, let's say, by the buses, by private cars, which are again conversion etc. happens, and by the three-wheeler autos? Any ballpark number, which is a major or larger segment for it?
I think we have answered this question in our previous calls also. Just and I'll repeat once again. The buses comprise about 8% of our CNG volumes. Then auto rickshaws is about 35% or so. Private cars and taxis, aggregators put together would be about 45%. The remaining would be commercial goods vehicles like small light commercial vehicles, trucks, etc.
Okay. And sir, in that case, what is the penetration? I mean, in terms of the park which is available versus that, of course, on the private car side, because autos, I guess, are should be completely on the CNG, so should be buses. Where and what's the risk of electrification that you foresee?
If you look at penetration in the black and yellow auto rickshaws and taxis, it is 100% penetration.
Mm-hmm.
If you look at private cars, we have about 4+ lakh of them. In our estimate of a total convertible population of about 12 lakhs. So that is about a 33% penetration. Penetration is very, very low in the commercial goods vehicle segment, hardly 2 or 3%, and that is one segment which we are looking to grow as much as possible, because of late some good positive moves have happened. OEs have now started coming out with factory-fitted goods vehicles on CNG. Previously, the only option was for retrofitting, but now across the range, right from light commercial, small commercial, intermediary commercial, going up to about the 18-ton range, you have CNG variants which are factory fitted and available with full warranty and backup from the OE for service and support, etc. Plus, given the fact that CNG is also becoming a more or less a pan-India phenomena, where all the highways going out of Mumbai now have got CNG right up to, if you go north from Mumbai, Gujarat, Rajasthan, right up to Delhi, you can drive on CNG without using petrol or any other fuel. If you go towards Pune, you can go to Pune, Belgaum, right up to Bangalore without having to put in petrol. You have CNG all over the place. If towards Nashik also you go, you have CNG till Nashik. If you go down towards Goa, I mean, Raigad district is ours, we have stations there. Then Ratnagiri, Sindhudurg, Goa, the whole belt right up to Goa now has CNG. That is also, encouraging the adoption of CNG for these goods vehicles, and of course, private vehicles also who travel intercity. That was on the penetration part. On the EV part, most of the penetration which we are seeing is happening in the two-wheeler segment actually. If you look at the national-wide or even state-wide numbers. Yes, Maharashtra has a reasonably, if you compare to other states, Maharashtra is doing slightly better in the penetration of EVs and four-wheelers, private cars, but that we need to keep in mind, that is actually a different market segment. Passenger cars come in entry level, then they come in sedans, then they come in luxury level, high level, etc. The EVs are coming in at this high level sedan and upward. So 8-10 lakh plus market segment is where the EV penetration is happening. Whereas a majority of the private car adoption in CNG is happening at the entry level, which is up to the 6-7 lakh rupees per car on road, those models. So it is not really impacting our volume, CNG volume growth yet.
Yeah, it was more pertaining to two-wheeler auto and the bus side of it, because most of.
Mr. Rajesh, we request that you return to the question queue for follow-up questions. The next question is from the line of Keval Shah from Banyan Tree Advisors Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is on the UEPL subsidiary. So did we get the final approval on the acquisition?
The finally received, because that is a lock-in period of which is ending in September 23. So we expect by October or November the approval from the regulator should be available, and then the transaction will take place of transferring the share and the money transfer.
Okay, and do we have the volume number for UEPL for FY23?
0.1? Around 0.1 MMSCMD.
Around 0.1.
Yes.
Okay, thanks for the answer.
Thank you. The next question is from the line of Darshit from robocapital.in. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah, thank you. So thank you for taking my questions. I just had simple two questions. First of all, you said that we have a revenue target of say 5 to 6% growth, right?
Not the revenue, volume target.
Okay, so what would be the revenue target if there is any for
revenue
say 2-3 years?
Dependent on so many other factors like the cost of procurement, which is a pass-through cost. So revenue actually depends on the cost of procurement and the pricing which we do.
Okay, and do we will we be able to see the previous 35-40 EBITDA margins going forward? Like how long would it take?
35, 40, 35, 40, sir?
Yeah, the OPMs.
As far as percentage is concerned, in case of CGD, let us say when my CNG was priced at 50 rupees, okay, and later on when gas prices went up by say 20 rupees, and I had to pass through that 20 rupees, maybe whatever was my margin within 50 rupees, I retained it as intact. Let's assume I had a margin of 10 rupees in my earlier price of 50 rupees. My price went up to 70 rupees because of gas cost increase. My margin still remains at 10 rupees. So as a percentage, 10 on 70, percentage term it will reduce. But that is not relevant as far as,
Absolutely.
Our performance is concerned. So we measure everything in terms of volumes and what is the margins you are making in absolute terms per SCM, rather than as a percentage terms. Yeah.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Devansh Nigotia from SIMPL. Please go ahead.
Yeah, thanks for the opportunity. Sir, can you help us understand how much will be the percentage APM deficit in FY24, assuming 5-6% volume growth, and the similar number for FY23?
FY23, roughly, we have got APM around 90 to 93%. Okay. And if I'm not very pessimistic or optimistic also, we should get around 88 to 90% in FY23-24 as well.
Okay.
However, this allocation will keep on change. This I'm referring to domestic gas volume, APM gas, right?
Yes.
However, with availability of HPHT on per CNG and domestic, I think the major concern is not there, and also spot is comfortable today and going down. Okay.
So you mentioned 88%, 83% for FY24.
Current year, around 93% we have got APM.
Yes, and FY24, you're expecting?
Next year, we assume that it should be in the range of 88 to 90%.
But look at February of 23 onwards, if you put together APM and HPHT,
100%.
they have got 100%. So it was only in the previous part of the year for some time where we are having to put in some market price gas into the priority basket.
Okay.
From 1st February onwards, government has allocated HPHT on priority to CGD sector. So APM plus HPHT is almost 100% of PNG and CNG volumes.
Okay. And how much? From when will be the Kirit Parikh will be applicable? The $6.50 tax?
8th of April 2023.
It's already applied.
Already in place.
Okay. Thank you.
Thank you. The next question is from the line of Shubham Shukla from Voyager Capital. Please go ahead.
Yeah, hi. Good evening, everyone. My first question is on EBITDA margin. So we even though we had a great quarter on this front, and it is the highest in the last 5-6 quarters. But if I look at the past 9-10 years, we closed the year with lowest EBITDA margin ever. So are we expecting those 30-35% plus levels back anytime soon?
EBITDA margins of 33%.
Can you repeat your question?
Like are we expecting those 30-35 levels plus EBITDA margin like we had 2 years back?
See, as I said earlier, sometimes back, I think it is not right to monitor our EBITDA margin in percentage terms. If gas prices go down from here, I may pass on the gas cost reduction. So my percentage may improve. If the gas prices go up, I pass on that burden on to the consumer, and the percentage may fall. So looking at margins for us or CGD companies in terms of percentage to sale price is not a very right parameter to look at. Okay.
Rupees per SCM.
Rupees per SCM per kg is a very good parameter to look at it.
Normally the cost is passed through, so we don't keep that margins with us. So rupees per SCM will be a more appropriate parameter to make the proper assessment.
Sorry, I didn't get that. Can you repeat that again? Last.
If we are saying percentage EBITDA to the sales is not a correct parameter to judge the performance. Better parameter is EBITDA to the per SCM, that is the volume sold.
That is mainly because our selling price is very, very, strongly correlated with our purchase price. And that is what moves the selling price the most. Our other costs, non-gas costs, etc., not that, they are more or less stable. It is only the gas purchase price which has wide fluctuations and which impacts our gas selling price. So, if our rupees per kg or rupees per SCM margin is, relatively moving in a narrow range, you will see EBITDA in percentage terms swinging up and swinging down pretty significantly. That's why we don't usually use that as a measure.
Okay, fair enough. Thank you. And just like your guidance, any like how like revenue growth and we are envisaging for FY24 next year?
Revenue growth again is, as we replied this earlier, again dependent on the cost of procurement and pricing we do. So primarily it depends on the prices, but prices are also dependent on the cost of procurement. And we have to see what is the alternate fuel prices, petrol, diesel and other alternate fuels. So revenue is again, like we see the revenue year-on-year growth of around 55%, but the cost of procurement has also gone up significantly. Therefore, the PAT has only increased by lower margin as compared to the revenue. So revenue is a more or less pass-through. If the cost of procurement goes up, we have to increase the prices, the revenue goes up. However, the profitability is not much impacted on that aspect.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Varatharanjan Shivasankaran from Ant Stock Broking Limited. Please go ahead.
Thank you for the opportunity. Sir, you had earlier guided for some upgradation of outlets. So has there been any upgradation done during the last quarter as well as the financial year?
Upgradation of outlets?
Yeah, you were basically planning to add the dispensing units, I assume.
Pardon? Can you repeat the last part?
I thought you were planning to add dispensing units, so that was part of your expansion program earlier, which you had guided for.
See, the CNG stations are upgraded in two manners. One, that we add new CNG stations, which is around 24-25 new CNG stations were added in this financial year as in the whole financial year, and almost 41 CNG stations were upgraded. When we say upgraded, it means either addition of compressor, dispenser, or capacity upgradation or things like that. So in total, we have done 65 upgradation and new CNG station in the whole financial year.
Yeah. And this run rate is expected to continue.
And this year, 23-24, you are asking? 23-24, we have set up more aggressive targets in terms of new CNG stations, and upgradation will be in the similar lines.
And if you can spell out that number, sir, what is the number of new
around 40 around new stations is expected to be added this financial year, and around 30-40 more upgradations may happen.
Any breakup between Mumbai and Raigad, sir?
Everything put together.
All three GAs put together, but mostly new stations will be coming in GA2 and 3. GA1 is already exhausted. GA1, when we say it is main Mumbai, and GA2 is Pune, Navi Mumbai. Sorry, not Pune. Thane and Navi Mumbai. And GA3 is Raigad. So GA2 and 3 will be are expected to see more of a growth in terms of CNG stations.
Very nice. And any CapEx guidance, sir, for next 2 years?
Sorry, we did
Can
not
you
get
again, we are not getting your voice properly.
So any CapEx guidance, sir?
CapEx?
Yeah.
This year we have done around 580 crores, and we should be doing around 500 to 600 crores depending on how the permissions are available space for putting up these stations, etc. So we will be doing the CapEx in this range.
For both years, FY24 as well as 25. For both 24 as well as 25.
Yeah.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Hemang Khanna from Nomura. Please go ahead.
Hi, sir. I hope I'm audible.
Yeah.
Sir, just 3 quick questions from my side. Sir, if you could help us understand on the operating cost side, what was exactly the reason, costs have remained largely steady YOY and are materially down QOQ. Secondly, on the INC realizations, if you could help us with the realizations for this quarter. And lastly, on what would be, you've given us this, you've helped us with these numbers earlier, but what would be the total gas sourcing for FY24?
Total gas sourcing for FY24?
Yeah, break up across the various sources of gas.
We don't have exact breakup as such, but let's say whatever is our requirement for CNG and domestic PNG will be through APM and HPHT mainly. If there is any shortfall in that, it will be catered through RLNG, spot RLNG. And rest, as far as INC is concerned, we have the term contracts in place as far as gas sourcing is concerned.
And so what would be the total HPHT which you've tied up already?
We have roughly earlier Reliance 0.1 and now we have tied up recently in the RIL auction 0.1, so 0.2 roughly. But of course, the earlier one pricing is different and the new is as per HPHT pricing of around $12.12 MMBTU.
Right, right. And so if you could help with the INC realizations and operating costs.
IC realization and operating cost.
Yeah, so current quarter you are saying Q4?
Yes, sir.
So current quarter realization of INC, there was some improvement, but the margins have improved mainly because of the reduction in gas costs. So the Henry Hub linked gas cost as well as spot and other term contracts, the prices were very favorable, and realizations have remained more or less same as last quarter. Okay.
Understood. And sir, on the operating costs for this quarter, any one-off or anything we need to call out in this?
I think operating cost, there is not much change. More or less, I think things are, let's say, hardly 10-20 paise difference. And usually in the quarter 4, our maintenance activity, spares consumption, etc. goes up. Most of the activity of pipeline maintenance also happens post rains. So if you look at my overall OPEX per SCM is around 5.45 rupees, which remains little low in first 2 quarters and it increases in second and third quarter. So second and third quarter has been in the range of around 5.75 per SCM, 5.75 rupees per SCM. Okay. So if you look at on an average annual OPEX, it has come to around 5.45 rupees, whereas last year was around 5.39 rupees, around increase of 6 paisa, which is very normal considering inflation and other general increase in the cost levels.
Definitely, sir. And just lastly, a follow-up. Sir, do you expect largely these, with the kind of pricing visibility which we have, that margins will remain elevated in the years to come, or, will we go back somewhere around the third quarter kind of numbers which we have seen earlier?
See, I think it depends on a lot of factors, as MD said earlier. Depends on the alternate fuel prices, depends on petrol diesel prices as far as CNG is concerned. Okay. However, as we said, now with availability of gas with ceiling of $6.50 and also balanced gas available through HPHT, spot prices also coming down. In case of INC also, all the index link contract prices have stabilized a lot. Okay. So we see that at least few months going forward and maybe 1 or 2 quarters, gas cost is going to be under normal level, what we have experienced in Q4. Okay.
Got it, sir. Thank you so much, sir. Thank you.
Thank you.
Thank you. The next is from the line of Yogesh Patil from Dolat Capital. Please go ahead, sir.
Thanks for taking my question, sir. Sir, can you please share what was the APM gas allocation for the quarter 4 and what is the current proportion of APM gas for the priority segment? Sir, this question is important from the point of view of your gross margin improvements in this quarter. If your CNG volume has declined sequentially and your input APM gas sourcing remain at the same level in the absolute number, then it suggests that the APM share in the priority basket is higher than, which lead to the lower cost of a gas, and that has ultimately lead to the gross margin improvement. Is that a correct understanding on the APM side?
Partly yes, because we have had availability of around 2.73 MMSCMD of APM during Q4. Okay, but the reason for gas cost reduction is a reduction of spot and replacement with HPHT. Okay, so earlier quarter I had consumed in the overall company around 0.36 of spot, whereas I have got in Q4 around 1.89 MMSCMD of HPHT. Also, the prices of spot in Q3 were roughly average of $33, whereas in Q4 it has come down to as low as $17 per MMBTU odd, little more than $17. Okay, so the gas which I replaced spot to HPHT compared to Q3, there was a reduction from $33 to $12.50. Okay, and the spot which I consumed also has a reduction of $33 to $17. Okay, so overall gas cost has reduced because of these two factors, HPHT and spot prices reduction. Apart from these two, the term contracts, be it RIL term contract or GAIL Henry Hub term contract or GSPC, all of them have seen reduction in the range of at least $1 to $3 in the term contract as well. So all this put together has added a very good, leverage in gas costs, which we have been able to reap, and the profits are reflected in those lines.
Oh. Sir, my second question is related to APM gas prices, which are reduced from 8.6 to $6.5 per MMBTU. Have you passed on the full benefit, 100% benefits to the consumer, or some benefits are retained?
We have passed on the full benefit to the consumer, and final calculations and impact will be seen if in case something more is available, we'll pass on again. But as of now, whatever is the reduction, that is $2 per MMBTU from 8.57 to $6.5 per MMBTU has been passed on to the consumer.
Okay, and sir, last question from my side. One of our medium-term LNG contract with GSPC will expire in June 23. So what is the plan? Are we considering a spot LNG will replace that volume, or are we trying to extend the same contract with the lower slope?
We have currently not taken any decision on this because, under our Henry Hub linked term contract, we are now getting full quantity almost. Okay, so which had a take or pay threshold of 60%. So there we will be getting almost equal gas what we were drawing under GSPC contract, and since my requirement of CNG and domestic is getting catered through HPHT gas, which we already tied up 0.1, and also currently HPHT gas is also available through exchange, and spot is also hovering around $10-12. So I think next 3-4 months is a comfortable situation. We will review that and we'll take an appropriate time a call whether to tie up for a long-term gas or no. But we will be certainly tying up some amount of HPHT gas in next few rounds as and when it is available. One round is available in this month, another maybe in the month of October or November this year. Yeah.
Yeah, 1 5-year contract we have already signed with Reliance Gas from 1st of May, 0.1 MMSCMD, which is similar volume which GSPC is having.
Okay, and then the last one, sir, news flow about a wet waste treatment plant to produce the compressed biogas. Can you provide some details about that?
Yeah, I think in the newspaper it was reported that BMC has announced one plant, which we are in discussion with BMC to put up a plant at a suitable location wherein they will be supplying the waste, and it will be CBG plant, that is compressed biogas plant of around 300 to 400 tons of handling capacity of waste and producing around 15 tons per day of CBG. So this plant is still to be configured. BMC is now also called MCGM, that is the Municipal Corporation of Greater Mumbai. So the contours are still not frozen. We are in discussion with them for signing an MOU. Then a detailed project report will be prepared and then FID will be done.
Yogesh,
Mr. Yogesh, we request that you return to the question queue for follow-up questions. The next question is from the line of Sabri Hazarika from Emkay Global Financial Services Limited. Please go ahead.
Yeah, good afternoon, sir, and congratulations on good set of numbers. So if we look into Q4, I think the EBITDA per SCM was one of the highest, probably during one quarter when it went up to 14. And now you've mentioned that the gas costing mix is somewhat similar, at least for the next 1 to 2 quarters. And you have also like passed on whatever benefit has accrued from lower APM gas price. So from a 1 to 1.5 quarter perspective, is this 12 to 13 rupees per SCM EBITDA sustainable now, or do you think that you could be like passing on further and bring the margins to a more normalized level?
Q4 EBITDA, I mean, if you talk about EBITDA per SCM is 9.5 rupees year on year, and Q4 is 12.8 rupees. So
yeah,
slightly better as compared to the full year. We will have a relook at these numbers in going future, and if some more price reduction is required, we will do that. But right now we are not envisaging any such thing.
I mean, we understand that I think on the industrial commercial it is completely a formula mechanism. But on CNG and domestic PNGs, I think some of your like peer group companies, they have some EBITDA per SCM in their mind, and based on that they do the pricing. So in your case also, is it the same, or you will be taking it as it comes?
So we will be looking at elasticity of demand as far as CNG is concerned. Yeah. If we find that the volume momentum as expected is not coming off, then we'll review our pricing, because that anytime price review is in our hand. Okay.
Right, sir.
And our EBITDA per SCM is always hovering around 8 rupees to 10 rupees in that range. So we are still in 9.5 rupees on the whole year basis. So, I mean, similar type of profitability is being maintained. One quarter, yes, you are right. Last quarter was slightly much better. But we will see going ahead how does it this year roll out.
So under the challenging circumstances, maybe like 9 to 10 rupees could be, I mean, of course not the final, but could be something which we can assume, right?
Yeah, in that range, we are comfortable in that range.
Right. And sir, one bookkeeping question, what was the industrial volume for Q4 as well as FY23 as a whole?
Industrial. Q4, I'll give you the volume combined, commercial and industrial.
I think the combined is there. I just need it for industrial.
Actually,
there has been some reclassification, so it won't be really apple to apple if you look at them separately.
So
okay.
Combined is around 0.45, okay, for Q4, and for the full year is around 0.44.
Okay, 0.44 and 0.45, that is for this thing. And has there been any change in the kg per SCM conversion for you, or is it the same 1.4 sort of a run rate?
There has been a marginal, drop. It is from, I mean, it's about 1.36 or 1.37. It is ranging around there. But then that fluctuates in a very small range.
In Q4, right?
Yeah, on a few days, if there is an upset in the ONGC plant at Uran, we get relatively richer gas, but then that gets rectified very quickly. So
not much has changed.
Thank you. The next question is from the line of Nitin Sharma from MC Pro Research. Please go ahead.
Thanks for taking my question. Congrats on a good set of numbers. You're deploying CDUs. Can you help us understand what happened throughout the year, what kind of volume came from it, how many have been deployed, and what is your plan for FY24?
Unfortunately, the CDU rollout is still stuck in a few regulatory hurdles. So currently, the approvals which we are getting from PESO, are not permitting us to deploy the CDU as it is, in true spirit of a CDU. It is becoming more like a, location-specific approval where I can't really move the CDU around. So And it makes more, if you are fixed to any location, it makes more economic sense to have a small conventional CNG station there, which is much cheaper than a CDU. You can have larger sales volumes also. So though we have given a couple out 2 or 3 LOIs to some parties to deploy CDUs, we haven't seen much progress on that. So there is still work to be done there on the regulatory front, on the safety regulations basically.
Understood. Thank you.
Thank you.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for giving this opportunity. One question on sort of the growth rate that we have seen in GA1, GA2. Would you be able to sort of give a breakup of the volume growth that we have seen in these 2 GAs?
I can give a breakup of the volume. Okay.
Just one, before that answer, just one point I'd like to make, big chunk of our volume is CNG, 70+%. And as far as GA1 and GA2 are concerned, a huge common boundary is there, in between Thane, Navi Mumbai, Mira Bhayandar, etc., where vehicles keep coming in and out, they fill, depending on their convenience, either in GA1 or GA2. So, attributing any particular growth rate, analyzing it that way is slightly difficult because these are almost seamlessly connected. If you look at the PNG sector, yes, there we can, have some proper numbers because the households, the industries and commercial establishments, they're either in GA1 or in GA2. But the analysis becomes a bit difficult when it comes to CNG.
Right, sir. Understood. And would you also mentioned about sort of lining up of some of the industrial consumers for Raigad with the implementation of CGS3? Would you be able to give us an insight what kind of volume that we could see in FY24 and FY24 by connecting them?
We should see at least a double-digit increase in our industrial sales.
Overall? So when we are, say, on a base of 0.45 SCMD that we have seen, we can see double-digit increase.
0.45 includes commercial also. So we are talking of still, which will be about 0.3 maybe.
Understood. And how long the run rate would be? Total, basically the way we are looking at the Raigad GA, the GA potential is somewhere in the range of 0.5 to 0.6 SCM. How much of that proportion would be the industrial demand?
Industrial would be about 0.25. But again, there is another issue there because when we are saying industrial demand is 0.25, it is the potential where typically gas penetrates against those alternate fuels which are being used by these customers. Otherwise, the total industrial fuel consumption of GA3 is huge if you take the coal, etc. Now, if there is some, restrictions on the use of solid fuels and polluting heavy fuel oils, etc., then the demand can go much higher. But given the current situation where we are only able to replace relatively higher cost liquid fuels because the price of market price gas which we have to use for INC is high, then we are looking at these kind of numbers.
Understood. And one more question, if I can squeeze in terms of the commercial or sort of the light commercial vehicles and tempo, that is your target segment. So, what kind of the sort of a payback period, or what kind of sort of the implicit savings could motivate that segment of the consumers to sort of translate into a faster growth of conversion? Would you be able to say what is your sense around that numbers?
So in the last year, the differential between CNG and diesel was not much. So we are selling CNG at 89 rupees, diesel was at 94. Now the differential has increased a bit, and we are at about a 16% discount to diesel. If you look at a small or a light commercial goods vehicle and compare its diesel variant to CNG variant, the price difference is not that different. So, the driver for the adoption of CNG in light commercial and heavy commercial is, no, not heavy, sorry, light and small, is more to do with what is the daily running of that vehicle and in which area it runs and whether it can conveniently refuel CNG or no. And since all these boxes are getting ticked, we were seeing those a few thousand of these vehicles adding on every quarter. Q4 there was a dip in those numbers because of reasons which you mentioned, but going forward we are expecting that number to increase.
Thank you. Thanks for this insights.
Thank you.
Thank you. The next question is from the line of S. Ramesh. Please go ahead, sir.
Yeah, thank you and good evening. And before we close the session, I would like to have your thoughts in terms of what is the contribution from new OEM vehicles in your conversion for fourth quarter, and do you see any increase in the number of new OEM CNG vehicles? Because Maruti is talking about very ambitious growth plans for vehicles. So what is your view on that?
You're talking of commercial vehicles or passenger cars, four-wheelers?
Both. Both. Because Delhi in IGL they're talking about primarily new CNG cars, but in your case perhaps looking at both. So we'd like to have a color in terms of if you're looking at the overall number of versions, what would be the split between actual genuine physical conversion and new OEM models? And within that, if you can give some color on cars and trucks, would be great.
Look, retrofitting is almost, negligible now. With so many OEs coming with so many CNG variants, whoever had to retrofit earlier because, he was finding petrol expensive and was driving a lot and would have already retrofitted. And probably 95% plus is addition is coming from the OE market.
Okay.
If you look at the adoption in private cars, etc., now Q1, Q2, Q3 on an average, we were seeing about 11 to 13,000 vehicle additions per quarter. Q4 that has gone down to about 9,000. Now in small commercial vehicles again, Q1, Q2, Q3 the range was about 1,600 to 2,000. Q4 that has come down to about 1,300. We are hoping that this Q4 dip was mainly because of pricing, and the April numbers are yet coming for the vehicle conversion, so we will get an idea only after maybe another few days or weeks. But we are hoping with the price differential again now, good, the CNG vehicle adoption should improve.
Plus, several OEMs have started making new models also. So this year, 23-24, we expect people have more choices, and therefore CNG prices being attractive should get a better conversion.
On that note, let me thank the management of Mahanagar Gas for being kind enough to host this conference call, and I also thank all the participants for making it a very enlightening experience. May I now pass on the proceedings to the management for closing comments?
Thank you so much for all joining for this call. If we are, because of paucity of time, if somebody's not got the answers completely, they can always write to us separately and we will be giving the proper answers. Thank you so much for supporting the company, and we look forward to have your support in coming years. Thank you.
Thank you. Thank you.
Thank you.
On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may disconnect your line.